Great. Thank you for having me on. Glad to be with all of you today. Welcome, everybody. Good morning. Today, I want to talk a bit about price action. I think 2018 is going to be a fantastic year for the markets. And by that, I don't mean I think it's a straight road up. It certainly can be. We've seen that pretty much for the past 8 years. But whether it continues going higher or whether there's some sort of significant pullback throughout the year, I think it's going to be full of opportunity. And one of the best tools, or I think essential tools that you need to navigate your way through the market, is to understand how to read and trade using price action. So whether or not you use indicators or not, that's totally fine. But you still need to understand what price is telling you. And that's what this presentation is all about. Once again, I'm Vince Vora. I'm the head trader here at TRADINGWINS. I have been doing this for a little over 30 years now. And throughout that time, have developed several systems. And I'm going to talk a bit about that today as well. Please do remember that the markets can be risky. So please don't trade with real money until you are completely comfortable with the system you are using. Now, before every presentation, I like to ask one simple poll question out of curiosity. How many of you have seen me present at an event like this or a webinar before? Please take a few seconds to answer yes or no. And I'm going to take a sip of my water, and then we are going to get right into this presentation. Excellent, thank you. Well, looks like there's more no's than yeses. Welcome if you're joining us for the first time. Really glad you can make it to this presentation. I think price action is absolutely vital when you're trading. If you're trading without it, or truly without understanding what it means, it is going to be a problem for you. So what we are going to do today is start with definition of price action. What is it? What is it? Now we use it. We're going to talk a bit about reversal and continuation, and in short form for that are pivot points. What are they? How do we recognize them? What are they used for? How, why are they so important? And part of that is has to do with identifying areas of support and resistance, which are also crucial when you're trading. Or I'm also going to talk a bit about a couple of other tools and how do they compare to indicators, how you can use them, why you would want to use them. And of course, if we have time, I will try to answer as many of your questions as possible. So what is price action? Well, price action is the movement of a security's price. So whether you're talking about a stock, a forex pair, a futures contract, that movement, those bars that you see on a chart, that's obviously price action. This is the part of technical analysis that we use to make sense of all that random back and forth movement. There is actually, a method to this madness, and there's a meaning for each one of those bars. By the end of this session, you are going to know exactly what an instrument is doing and when, and who's in control, be it buyers or sellers. Those swing highs and swing lows, that is all part of those pivot points, all part of the support and resistance, which we're going to talk about. But let's start with the basics of price action. And it all comes down to reading one bar at a time. Now, whether you use open, high, low, close bars, or whether you use candlesticks, which is my preference, it really doesn't matter. You read it the same way. Now, I'm going to use candlesticks. And on my slides here, they're going to be white and black. On the chart, they'll be green and red. It really doesn't matter. Obviously, the clear ones are the equivalent of the green candles, which are up days, and the black are equivalent to red, which are down days. But this is how you would read a bar or a candle. So most of them have a body, and then they have these lines at the top or the bottom, which we call wicks. Now, if it's a clear body or green, it means that it closed higher than where it opened. So the bottom edge of the body here is the opening price. At some point throughout the day or throughout that session, be it if it's a 5-minute candle, a 15-minute, a daily, weekly, monthly, really doesn't matter. You read it the same either way. At some point throughout that session, it went as low as the tip of this wick here, as high as the tip of this wick here, and wick here, and then it closed at this level. So if it closes higher than where it opened, that's why it would be green or white. The opposite is true here. We open at this level. At some point throughout the session, we got as high as this wick, we got as low as this one, and then we closed here. And the fact that we closed below where we opened is why this is black or red. So the size of the overall candle or bar matters. So the range from high to low matters. The size of the body matters. All of these things matter, okay? And this is why they're significant. What I want you to do is think of each candle as a tug of war between buyers and sellers, because that's what's going on here. There are buyers and there are sellers. Who wins that individual tug of war is very important, and who's in control overall is very important. Those are the two questions that you always have to ask yourself whenever you bring up a chart. And again, whether it's a 5-minute chart, a 1 minute, a 15-minute, daily, weekly, monthly, or whether you're trading Forex, futures, it doesn't matter. You read it all the same, okay? Now, let's have a look at this little clear candle on the left here. Again, remember how we read it. Because it's clear, we opened at the bottom edge of the body. At some point throughout this session, we got as low as this point, as high as this point, and then settled in here. So what is this telling us? Well, the fact that it closed higher than where it opened would tell us that buyers won out, right? Buyers had more control here than sellers, which is why price closed above where it opened, right? But was it a significant tug of war? Or was it, a very, very minor battle? Well, the smaller that body and the smaller the range from high or low, the less significant it is, or the less weight it actually carries in the overall picture of that particular chart. As compared to a candle like this, which is much wider in range from high to low and has a much bigger body from open to close. So again, we read it the same way. We opened here. At some point, we got as low as this point, as high as this point, and then we settled here. So what this candle is telling us is that from the open here, buyers obviously put a lot more pressure on here, on sellers, and managed to push the price way up here, okay? So the higher price goes, or the wider the range of this candle, the more significant it is. It means there was a lot more buying pressure here than there would have been on this candle, right? Or at least we could say it was much more one-sided, right? There was a lot more buying than selling, which is significant. These are all things you have to make note of. And so again, you have to ask yourself two questions. Who won the individual tug of war, and who's in control overall? Well, clearly you can say here on this bar that buyers won this individual tug of war. Now, when we bring up a chart, we'll be able to tell, and I'll show you exactly how to know who is in control overall. But now let's look at the black candles. Once again, we have a very small, low range candle here. The fact that it's black means that it opened at the top of the body, went as high as this point, low as this point, and closed here lower than where it opened, which is why it's black or negative here. Once again, was this a significant tug of war? Not really. We could say that sellers had the edge. There was more selling than buying, but again, doesn't carry anywhere near the weight that this candle does, the candle on the right. This one, we opened up here. We went as high as this point, as low as this wick, and then we closed down here. So we closed substantially lower than where we opened, meaning sellers had a big edge here. There was a lot more selling than there was buying going on, right? So this is very bearish. Now, you will from time to time find candles that do not have wicks. In other words, the open is the absolute low of that session and the close is the absolute high, or vice versa, right? These are the most significant candles that you will ever see on a chart. These are very important, and the wider the range from open to close, the wider the range, the more important they are. These are the ones you really want to pay attention to, okay? Because from the open here, it was completely controlled by buyers. On the flip side, the black candle opened up here and was completely controlled by sellers who managed to drive the price all the way down to here, right into the close. So at no point here was there any confusion of who was in control. And that pressure, the buying pressure here, lasted all the way into the close of that session, right? So very, very significant. Now you will also run across candles that look like this. And by the way, each candle type has a name, whether it's a spinning top, a doji, whatever you want to call it. The names don't matter. The names don't matter. It's what that particular candle is telling you that matters. So now let's have a look at this. Here we have a candle that has a very, very small body, just like one of the first ones that we looked at, but it has much longer wicks. So what does this mean? Well, first of all, let's read what it's telling us. It opened down here at the bottom edge of this body, went as low as this point, as high as this point, and then settled down here. So what this is actually telling us is that buyers still only had a slight edge here. We managed to close slightly higher than where we opened. So buyers, we can say, won this individual battle, but not by much. But what's significant about it is that it was a much bigger tug of war, right? There was a lot of back and forth. At some point, sellers drove the price all the way down here. And at some point, buyers took it all the way back up here, right? So it was a lot. There was a big battle going on, but in the end, one side won out by a slight margin. Same is true here. We opened here, went as high as this point, as low as this point, and closed here. Again, a big battle back and forth, right? A huge tug of war, won out by the sellers here by a slight margin, okay? And then, of course, you have these types of candles, where you either have a very, very small body or no body at all, and a small range from high to low as well. So these are not as significant, meaning obviously the tug of war there wasn't much of a tug of war, and really no one won out, right? It was a tie, we can say, because we opened and closed at the same level. But what you're going to find on a chart is that these types of candles usually appear at either the bottom of a downtrend or at the top of an uptrend. In other words, a lot of the turning points happen on candles such as this. So think about this. If buyers were pushing price higher, 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 and suddenly you get a candle like this, what does it mean? It means that there was an equal amount of selling as there was buying. So, those usually lead to those turning points. And that's why these are significant. But now let's put this all together on a chart and let's go through it. So first of all, before we start reading candle by candle here and trying to figure out what the chart is telling us, one of the best pieces of advice I can give you to make trading easy for yourself is to trade charts that are nice and clean and that are trending strongly in one direction or another. So if you look at Boeing here, all of last year, Boeing pretty much was a nice, strong, trending stock higher here. And you'll notice that the candles are more or less the same size, right? Aside from a few here and there. But they're very orderly. The trend is very clear. There's no other way to read this other than bullish, right? and it's just a nice, slow, steady grind higher. These are the kind of charts that are going to make your life as a trader very, very easy. You know, first of all, your job is just to find a pattern that repeats itself, and then rinse and repeat. And we'll get to that. And price action will tell you when you should get in and when you should get out. But your odds here of success are much higher than they would be on a chart that is very messy and choppy like this one, right? If you're trying to trade a chart like this, price action is still going to tell you exactly what's happening. But your odds of getting stopped out on a chart like this are extremely high. Your odds of success here are very, very small, because these are usually associated with low volume and a lot of volatility back and forth. So why would you want to try to guess a spot to get in here and quickly get out and get back in and quickly get out when you can trade a nice, clean, trending chart like this one? Look at the CBOE. Pretty much anywhere you would have got in, you would have made money on this. And the candles are still going to tell you exactly what's happening on your chart and exactly when to get in and exactly when to get out. Now, if you use indicators, that's fine as well. I do use indicators myself. They can be very, very helpful. Just make sure you don't cloud your chart up. So, you know, if you add a bunch of indicators and it looks like this, you're going to have a much more difficult time reading it. So try to keep them to a minimum. And they're really, indicators are meant to be used as confirmation of what you're seeing on the chart, really, to confirm that it is time to actually get in or get out of that particular underline. But picking a nice clean chart that's trending strong in one direction or the other will really serve you well. Okay. Now, let's start reading a chart. And you know what? Let's go to the Dow. The Dow's been doing very well. I'm going to zoom into this section here. Now, no matter where you start reading on a chart, really doesn't matter. You read the candles the exact same way, okay? But let's look at this point in here, in September here. If you read these candles here, what was happening with the series of red candles here, okay? Remember, you have two questions to ask yourself. One is, who won the individual battle? And two, who's in control overall? Okay, so if you look at the individual red candles, and we're consistently closing lower and lower, obviously sellers are winning those individual battles, right? Are they really in control overall? You know, during this minor stretch maybe, but overall, you can say here, this was an area of consolidation, right? It's just kind of back and forth within a range. No one's really in control. Now, what you need to, the reason why you want to be able to read candles one by one like this is to identify those turning points, okay? Because that's really going to determine when you get in and when you get out. So if you read these red candles and we're closing lower and lower here, what do you have? So you have these very small range candles to begin with, right? Then you have one significant drop here, but following that drop are two very small candles where we could say, you know, sellers won this battle, but not by much, right? The individual tug of war. But did they really? Let's have a look at this. Let's go a little closer. Have a look at these candles, right? We read it the same way. It opened at the top edge of the body, went as low as here, as high as here, and closed at the bottom edge, right? So closing lower than where it opened, which is why it's red. But compare it from one close to the other. It still closed higher than the previous close, because the previous close was at the bottom edge of this body here. So it did actually close higher than there. So it was actually buyers here that won this battle, okay? That's why it's important to understand what the chart is actually telling you, okay? Now, this one here, a bit more of a battle, closed slightly lower than the previous one, but not by much, right? Now let's look at this green candle. We opened down here, so immediately open lower than where we closed the previous day. We actually trade lower throughout, and then we come back. Actually, sorry, we open down in here, right? The bottom edge of the body. And then we spend the day making it back. So that in itself is important. Now, if we look at who won that battle, it's still sellers who won that battle because we closed lower than where we closed the previous day, did we not? Right? But buyers put up a pretty good fight, you know, retracing a big part of that initial loss throughout the day. But where this gets really important is the next candle here. Is not only do we gap higher, but we close substantially higher than where we were. So remember, the wider range candles carry more weight, but the candles with bigger bodies carry the most weight, right? And the ones with no wicks whatsoever and large bodies are the most significant, okay? So now we've gone from putting in lower lows here to putting in higher lows, right? We've turned that corner. This is what we call a pivot. So if you look at these 3 bars here, keep an eye on these 3 bars, right? The bottom, the middle bar has a lower low than the candles on either side, right? So we move lower and now we moved higher. Okay? This is important, and this is a significant reversal signal, especially when you get a close above the high of that first candle. So we were trending lower, and now we turn the corner. And if we close above the high of that first candle, that's a nice reversal signal. So let's say that we see this pattern. We're going to mark the high of this bar, and any move above it is going to be our entry. So let's say we go long here. If we go long, who won this battle? Obviously, buyers did. The candle is green and the close is higher than the previous close, right? But it wasn't much of a battle, small range. This one, a little bit bigger of a battle. Again, buyers win this one, right? We open down here, we close up here, we close higher than the previous close. Same here. Now, again, a little wider range, even more significant. So the buyers are starting to really get control here, right? Again, they win. They win. So now we have a situation where not only are buyers winning the individual battles, but they are obviously in control here. And so one of the most difficult things for a trader is to stick with a trade once they're in it, right? How many of you have been in a trade and then gotten out a little early because A, you were worried that, you know, you might have to give up your profits, or you saw a red candle like this and panicked and thought, oh, the run is over completely, right? You know, has that happened to any of you? This is a very, very common challenge for most traders. Well, if you're reading the candles one by one here, that will help you overcome that issue. Because if you're in this from here and you're seeing that buyers are winning the individual battles and they're in control overall, then why would you need to exit? You wouldn't. Okay, so let's carry on. Now, we get to a candle like this. Is there any reason to be concerned? Well, let's look at it. We opened here, which means we opened slightly lower than where we closed before. We go down as high as here, as low as here, and we settle down here. So yes, we closed lower than the previous close. But it was a small range candle, not very significant, really no real reason to exit. The only time you have a real reason to exit is when you close below a previous low. Okay, so I'm going to say that again. The only time you really have to worry when you're in a trade is when you get a close below a previous low. So you see here on the red bar, we closed up here, but we didn't close below the previous low, which was down here. Okay, so yes, it's a red flag, but it's not a reason to exit. Now, if we look at the next bar, right, again, not much of a battle, but where did we close? We closed below a previous low. So now what you want to do on a candle like that is mark that low. And if you get a trade below there, that's your out. Okay? That is your out. So yes, someone says the red bar is an inside bar. Absolutely, it is, which is another candlestick formation you might want to be aware of. Whenever you get a candle that the high and low is completely within the high and low of the previous candle, that's an inside bar. And usually a close outside one of those levels leads to the next direction. But it's important to read it one by one. Here's why. Here, we did break out below the low, right? Which would have been a reason to exit. So we got in down here, we got out here, we took a nice little profit. Now let's follow this along. This next candle, we get a much bigger fight, right? A much bigger tug of war. Who won this battle? Well, since we closed lower than the previous close, we can say that sellers still won, but buyers put up a heck of a fight, right? Sellers drove it all the way down here, buyers drove it all the way back. So that's sort of a heads up that maybe buyers aren't done yet here. Okay, now we look at the next one. Again, sellers went out, but not a major move. These lows aren't taken out. Now we get to this one, and again, we see that we closed lower than where we opened, but we still closed above the previous close, and we had another nice reversal, another sign that buyers are coming back in. Okay, here now we get a bigger body, right? Buyers push this up and closes above the previous close, right? And this is another, if you want to get into candlestick formations, this is an engulfing signal, which is a reversal signal. But we don't need to jump ahead. The whole point is we can tell what's happening with price just by reading it candle by candle, okay? Now, stocks don't normally go in a straight line, or forex pairs, futures, contracts, whatever you want to trade. They usually go in sort of a stair-step kind of zigzag pattern, whether they pull back a little or consolidate and then go higher. So the easiest thing you can do in trading is take a break of those highs. So you move higher, you pull back a little. If you break that high, that could be an entry on its own here, okay? You mark this high. If it breaks that high, you're in. Breaks this high, you're in. Same way. Either way, what these points are here are the pivots. These are the turning points. So these are pivot highs, and these are pivot lows. These are the turning points that you want to be aware of. Now, at most turning points, you will get some sort of reversal signal, be it an inside bar formation, an engulfing pattern, a morning star, whatever it is. And you can use those. If you use indicators, you'll find that your indicators will help you confirm those turning points, okay? But what matters more than anything is how you manage that order once you're in it. So once you're in it, let's say we took a break of this high here, this previous pivot high, as our entry. So we got in here. Now, what is this part telling us? Well, buyers definitely won this battle, right? Buyers won this battle. You know, who won this battle? Well, we closed pretty much at the same level, okay? Call it a break even. Buyers still firmly in control. Now, here's a red flag, but is there any real reason to worry? Did we close below a previous low? No, we did not. Same with this one. Did we close below previous? No, we actually closed higher than where we closed before. Here we closed higher than before. Here we closed higher than before, right? Here, did we close below a previous low? No. Same here. No, we close higher again. We close higher. We close. You see? So when you're reading it candle by candle, it's very easy not to get scared out of the trade and remain in. And the only time you want to worry is when you get a close below a previous low. So now here, we got a close below a previous low. So what do? We mark the low of this candle, and that's where we put our stop. Did the stop get triggered? No. Did it get triggered? No. Here, we got another close below a previous low, right? So now we can move our stop here. Did the stop get triggered? No, it did not. You know, we continue on until it gets tripped. And what you'll find is that this will keep you in for the bulk of the move. All right. But I can't stress enough how important it is to be able to read this candle by candle. Now, what's the difference between, how do we know when we see a pullback like this, how do we know that it's just a temporary pullback compared to a change in trend completely, right? To a complete change in trend. First of all, I want to say TJ is asking how important are the closes. The closes are the most important part of this. Where it closes is everything compared to the previous close, okay? Then, you know, how wide the candle is and so on. Just, you know, it gives you a bigger picture of what's going on, but the closes are everything, okay? But here, when we saw a pullback here, how did we know that, hey, there was a real opportunity to go long again versus, oh, this is now going to turn into a downtrend from an uptrend? Well, it's very simple. It's like this. So stock is moving, right? And what are these pivots telling you? It's continuing to make higher highs and higher lows. So this low is higher than this low. This low is higher than this low, right? This high is higher than this high. This high is higher than this high, right? At some point, you're going to get something like this, right? Where it drops back. It tries to go higher, but can't quite get back there. So it puts in a lower high. And then once this low is broken, and you know you have a lower high and lower low situation, that's when you know you've turned that corner. So here we pulled back. We didn't make a lower low. And then as soon as we made a new higher high, we knew we were off and running again. That's why the break of these highs is an easy entry. Just like the opposite is true if you're in a downtrend, right? Like this, a break of the lows is a no-brainer because it means it's a continuation. If you have a trend lower, you pull back slightly, and then you break that low, you know you have a continuation, okay? But if you pulled back up here and then tried to go lower and couldn't quite get back to this low and then turned, now you know you have a completely different situation on your hands, okay? These, by the way, are also what you would use to identify levels of support and resistance. So when you see a pivot, when you see a turn like that, and these points are pivots. These are your pivot highs. These are your pivot lows. If you just draw a line from those pivots, okay? So let's say I'm going to take my price level here, and I'm going to draw, once this pivot is made, I'm just going to draw a line, a horizontal line from that pivot, okay? Here, we knew this was a pivot over here. As soon as we broke the low of this candle, we knew we had a pivot here. Way before we ever got all of this price action. When you draw that line, you know at some point in the future, that level will act as a level of support and resistance. And look what happened here. We blew through, we came back to retest it and held, right? So when we were moving into it, that was acting as overhead resistance. Once you clear it, it acts as support. And so now, when you see that pullback and price turns, and you see that buyers start taking control, you know support was held, and you know you're most likely in for a run. But what's another easy entry? A break of the highs. You break those highs, and off you go, okay? And there'll be times where price will get you in and out quickly, right? But it'll usually get you right back in if it's telling you to do so, right? So what price ends up telling you is that if you're in trouble, if you need to get out, it'll get you out at a small loss. But when you're in a run, when it trends strongly, it'll keep you in for the bulk of that run. So over the long run, your losers will be small and your winners will be much bigger than your losers, okay? which is very, very important. The math works in your favor that way. But now you can use indicators to help you identify a trend. So look, one of the easiest things is to put on a moving average and only trade when that moving average is sloping in your direction. Okay, so where traders get into the most trouble is during periods of consolidation, right? When the stock goes sideways and they get chopped back and forth. First of all, if you're reading price and you're trying to get in there, your losses will be very small. But remember the two questions: who's winning the individual battles and who's in control overall? You want to trade when it's clear who's in control overall, when it's trending strongly in one direction or another. If you put a moving average on, like a simple 20, for example, if the 20 is flat, like in here, you don't have to be looking for trades, okay? But look, let me get rid of all these lines and show you something. Remember when we said, hey, if you want to trade the break of the high, right? Well, what was the 20 doing when we broke that high? It was actually sloping higher. It was sloping in the direction of the trade. That's how you knew it was safe. Look at this pullback. It pulls back. Does the 20 move? It doesn't. So that's also helping you understand that there's going to be a continuation of that move. So very, very simple tools to help you. You can also use Fibonacci tools to help you. So let me give you an example here. Let's look at 3M. And let's go back to this setup in here. If you take your fib retracement tool, Fibonacci tools are meant to help you identify significant areas of support and resistance. And all you do when you think you have a trade setup here, or a potential reversal along this upsloping 20, okay? You have to look back and identify the most recent low and the most recent high. So you take your Fibonacci tool and you click the low and then you click the high. And here, let me zoom in here and show you. The levels you want to pay attention to are these three levels here: the 38.2, the 50, and the 61.8. And I want you to think of this as one big zone, not individual levels. What that is telling you is that it is one big area of support. So as price pulls back into support and comes out of support there, there's a very, very strong likelihood that it will continue going higher. Because there was so much support here that price could not break through to the downside. It reversed, okay? And so it's a very, very effective tool. So all you have to do when you're thinking of getting in is to identify the most recent low and the most recent high, mark your fibs, and see if price pulled back somewhere into that zone and then pops back out, okay? Another tool to help you set targets during this run, because if you're in here and you want to try to guess how much room is there, how much upside is this, how far can this run? Now, remember, you don't really need to know because you can just follow price. You can read each candle one by one, and if it ever pulls back and closes below a previous low and takes you out, that's okay, because if it continues, it's going to get you right back in. Okay, so if you were here, you'd have probably been out somewhere in this area here, right? But then right back in on a break of these highs. That's it. So, you ride this up, you get it out here, and then you get back in here. Commissions these days are insignificant, so it's a very easy thing to do. But if you wanted to guess on how much room this had to run, you can take your fib extension tool. You use the same previous low and high. You click on the low, you click on the high, you come back to the low. And now what this is telling you is these are your overhead targets: the 100% level, the 127.2, and the 1618. These are all levels that are going to act as overhead resistance, okay? So when you approach one of these levels, there's a chance that it will break through, and if it does, it's more than likely going to the next level, or there's a chance that it will bounce off and then come back, right? So you can scale out here. If you have multiple contracts or multiple shares, Sell some here, let the rest ride. Sell some here, let the rest ride, and so on. But these are very, very effective tools, okay? But it all starts with price action. Pick a clean trending chart and read the candles one by one. Now, it may seem simple, and yes, there is a lot more to this, but if you're just using this, it's enough. And you, believe it or not, you're gaining an edge on the market by understanding this. And where most traders go wrong is they jump in, they learn other strategies, put in multiple indicators without really truly understanding what's happening on a chart. And the only way you can do that is to read it candle by candle. Now, can we do more with this? Absolutely. And what we've done, if you go to tradingwins.com/action, is put together a pro training session for what we call the magic of price action. And during this on-demand training session, what I'm going to teach you, in addition to what I explained, because I'm going to go through it in a lot more detail, but I'm also going to teach you 2 techniques to use trend lines, how to use trend lines, when and how to use them to find some pretty powerful trade setups, okay? Also, trading channels, breakouts out of channels, those sideways consolidations, those price range moves, those present you with some of the biggest opportunities. And I'm going to tell you exactly how to identify it and how to know when we're about to see a breakout and how to take advantage of that breakout. And then one of my favorite parts of this class is to teach you a method, a strategy that I used when I first started trading over 30 years ago. Back then, we didn't have all these fancy charting platforms with all these tools. We used to actually use a pencil and a ruler, and using the open, high, low, close figures for the day, we used to draw our own bars and candles and draw our own trend lines with our pencil and ruler and do it all manually. And believe it or not, there is a simple technique that works just as well today as it did then. If you want to simplify your trading, but really put the odds in your favor, this is a strategy you're going to want to have. It's so simple, such an easy technique, and it works just as well today, and it's going to work just as well 30 years from now. I'm also going to share with you 3 of my money management techniques, because money management is a crucial part of trading overall. For those of you who like to trade with indicators, as a bonus, we're going to throw in our Magic of Ichimoku training course. Ichimoku is an indicator that's used for trend, but can also be used as a strategy in itself. We normally sell this for $197 on our store. We're going to throw that in. And we're also going to throw in a 30-day membership to our TradingWinds Pro membership service. What that entails is 5 times a week, every Sunday to Thursday, I'm going to send you a video every night recapping what happened in the markets that day. That's also the format where I share my trade ideas. And also, we're going to meet up twice a week, every Monday evening and every Thursday morning. We had a session this morning. You get to come into our live room and ask me any trading related question you like. So if you have follow-up questions on this on-demand recording or what we talked about today or anything to do with trading, I'll do my best to answer your questions and help you improve your trading. And also, once a month, we do what we call a course of the month for our pro members at no additional cost. So you'll get that as well. So, and for those of you who may not have a charting platform to start with, we'll throw in 60 days of Metastock Pro for you, and you can try that out. My dog just got excited about that one. But, you know, we always like to do something special on these events, and we're offering all of this for just $3. Now, I can tell you there's a lot of content here. It's worth way more than $3. We're not doing this to make money off you here. We really want you to see what we do here at TradingWinds, because we're quite proud of it and we think you'll really enjoy it. So if you go to tradingwins.com/action, that'll take you to this page. All you need to do is click on either the $3 or the Get It Now button, and your order will be processed immediately, okay? I think I'm out of time. I apologize for not having time to get to your questions. If you have any, you can send me an email at info at tradingwins.com. I'll be happy to respond to you. Again, the link is tradingwins.com/action. Trust me when I say price action is the absolute, without it, you cannot trade successfully. You really cannot. So please learn it, whether you take advantage of this offer or any other. Please get very familiar with price action. It'll serve you very well. Thank you again for being with us today. And there's a number of other great presenters coming up. I just want to pass this back to our host and say thank you once again for having me on. Hopefully we can do it again soon. Thank you.